Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello, YouTube. This is Frank coming to you with the market recap for July 24th, right smack in the middle of earnings season, and gotta love it. Gotta love it. Let's start off tonight talking about a couple of the big names that came out last night after the market was closed. Of course, we have the big boy Alphabet Inc. or Google, as they were once known and are often still called. Definitely had a nice report, big gap up on the open, kind of led the market, I think, a little bit here today. So very strong report for Google. On the other end of the spectrum, Whirlpool last night reported, and well, they went the other way quite dramatically, down 14% on the day. So that's what earnings can do. So looking into tomorrow morning, another busy day tomorrow in the earnings world. Come some of the big notable companies into tomorrow morning. Will be this was yesterday, or this was today. There we go. Tomorrow. There we go. Tomorrow before the market opens, we have Boeing, we have Coca-Cola, two huge companies, UPS, Thermo Fisher, no small fries either. So some really big names before the open tomorrow. We also had AT&T report this evening, and it looked okay. I didn't have a chance to really dig too much into it, but it did look okay at first glance. But we'll have to kind of see how that plays out going into tomorrow. So still a ton of earnings. We've got Facebook will be reporting tomorrow night as well. So we've got a ton of earnings, big names. But overall, you're definitely, so far we still seem to be seeing a lot more hits than misses this earnings season, which is definitely, if you're a bull, definitely a good thing. So we'll see where we sit here tomorrow. Taking a look at our overall markets, we had a strong open today, kind of probably buoyed a little bit by some of those earnings, particularly Google's earnings, but did this kind of sell off, for much of the day. Here we have the NASDAQ. Technically, not a lot has changed. We gapped up, we did sell off, and saw a little bit of a bearish candle develop, but our overall pattern still remains pretty much the same as it was yesterday. S&P performed a little bit better, kind of held their own a little bit better off of their breakout, but we did kind of doji, but kind of continuing that overall breakout pattern that we've seen over the last couple of trading weeks. The Dow was actually our strongest index today. Pretty strong movement to the upside following those two dojis over the last couple of days. And then our Russell, he was our dog today. Not a great day for the small cap companies out there. But technically, I really am glad that it kind of played out the way it did. Over the last several days, we've been talking about a potential cup and handle breakout pattern, and that potential breakout pattern is still potentially there, technically. But now we know, this is a pretty tough level of resistance. But we also know where support is. And so we kind of are smack dab, stuck in this little trading range. I always like when I see charts that look like this, because I know sooner or later, one way or another, we're coming out. I don't know if it's the upside. I don't know if it's the downside. I don't know if it's tomorrow. I don't know if it's next week. But I do know eventually we'll come out of these trading ranges. So I'm glad to actually see that. To be honest with you, I kind of like that type of a pattern. Yeah, but interesting that they were just not having a day today. The small caps definitely did not have a great day in the market. Now, coming into our sectors, we did see a little bit of a bounce off of that material sector trend line that we were looking at yesterday. I didn't trust it very much. In hindsight, maybe I should have, but we certainly saw some people trust it, and I guess that's all it takes is some people to do that. Energy had a pretty good day, and no surprise, our energy ETF, Sector Spider ETF, also performed pretty well. But again, we're still in this big trading range that we've been in for quite some time, and from everyone I've kind of talked to, seems like we want out of that for some clarity. Whichever way it's going to be. So finances built a little bit off of yesterday's momentum. Of course, yesterday they flew right back through their 200-day moving average, up to resistance, gapped through that this morning, and were able to hold their own okay. We do have quite a bit of overhead, as we talked before, just shy of 2850. That will be a challenge, in my opinion, and it should be. We've struggled there before, so that will be what I'm watching for. But you can't deny, the momentum that the financials have right now. That is for certain. Our industrials, man, you're going to get tired of me saying this, but once again, they're still fighting with that 200-day moving average. We're now 5 days into it. They tried early, gave up, before too long, and we find ourselves basically the same place we have over the last 5 trading days. You've got to give the industrial sector credit. It's trying to get through that 200-day moving average, but that is not an easy task as of right now. And it never is, in my opinion. I always look to that to act as a support or resistance level. It's a pretty long-term major moving average. Of course, no surprise, tech, just like the NASDAQ, and I had a good day. Google, big part of it, I'm sure. But we were able to kind of continue to build into that breakout that we've had going on. Staples, they just keep on keeping on. One day I'm going to give them more respect. I've been looking at it for 2 months now, it seems. Yeah, they're just chugging along, but I don't like it. I'm just not a big fan, but it just keeps chugging along. So that's all right. I don't have to do anything as long as I'm not going against these trends. Then I'm all right. Maybe I missed out on some opportunities, but I probably had opportunities elsewhere that I could take a look at. Maybe I liked a little bit better. So not a whole lot has changed in that department. Utilities continues to be a wonky mess. I think I called it wonky yesterday and the day before too, and I continue to feel that way. Still kind of in between support and resistance. We broke the 200-day moving average on the intraday today, but we didn't hold that break. We kind of buyer step back in. We ended up closing above that. Really, I have no read on the utility sector, to be quite honest with you guys right now. We're stuck between support and resistance, and there's other more interesting things in my estimation, like healthcare. Healthcare is a lot more interesting. Has been holding that breakout point. We saw the doji on Friday, a little bit of momentum yesterday, carry over into today. Had some strong earnings on things like Biogen in the healthcare sector today. And as we talked last week, there's not a ton of overhead, which is always something I'm interested in. Nothing in my way. Who knows how it plays out, but it's easier to break resistance if there's not any resistance, right? So that still looks like a pretty interesting sector to me, kind of continuing that hanging out mode in our discretionary that we found ourselves in for much of the last 2 weeks as well. Real estate continues to kind of hang around on that old breakout point. I would love to see a turnaround candle tomorrow or the next day as we kind of continue to sit here. We don't want to break, so that's a positive thing, but nobody's quite ready to get involved on this retracement just yet. All the early folks jumped in last Thursday, and if you weren't that aggressive, all the rest of us are waiting for that turnaround candle, and we'll see if we get it. But I certainly wouldn't mind seeing a turnaround candle here in the next couple of days in the real estate sector. I do love that pattern for sure. I love testing old resistance as new support, and I love when I see it put up a heck of a fight because I know it's trying to hold. Maybe it's not going to be successful, but I like to see it try. Not a whole lot unchanged in our metals. Pretty much same song and dance. We're still overall a downward move. It looks like they're maybe trying to put together a little bit of a short-term floor, but I can only speak for myself. I'm not trusting it if that's in fact what they're doing. So to each their own. Natural gas, kind of a similar situation, but they are kind of at a support level, at some floors. So that could be something to maybe keep an eye on if you are a natural gas trader. We did have a rebound in our energy today, or our oil today. So we did see some movement back to the upside in the oil sector, and nothing in our dollar sector. We are still in that trading range. We do stuff, but we don't do stuff. We don't ever seem to come out of that trading range. And until we do, I guess I'll probably keep saying that and keep thinking that as I'm looking at the dollar chart. So that's where we find ourselves. I definitely think we have to have some interesting sector charts going on right now with healthcare, with real estate, I kind of like industrials as a pair personally, but that's my opinion. But I do know they're struggling for sure. But our big winners today, of course, were the energy, healthcare, and material sectors. They definitely had a good run today as we move into the next part of our trading week. Tomorrow we do have our inventory report. So for all of us oil traders, definitely going to want to make sure we're keeping an eye on that, because we all know that can definitely move the market, especially in the short term. We also have new home sales tomorrow to go along with the slew of earnings that we have. Once again, let's just look at tomorrow. And this is just the S&P 500. We have to go to the third page. That's how many earnings are coming out tomorrow. So a pretty big news day, although very much influenced by the earnings announcements, as is often the case during earnings season. So hopefully we'll see some nice pops. Always fun. It's always an easy thing to do, guys. If you like to kind of see what happened on some of these stocks after their earnings, just go back into whatever the date is. So we can go into yesterday after the market close, for example. And that's kind of where we were able to see what did Google do. They had the gap up. What did Cadence do? They had a little gap, but didn't really do too much. Zions had a little bit of a gap. So you can always easily kind of come in here, set up your FinViz this way to kind of see what, if anything, kind of jumps out to you, what's interesting to you after the fact, as well as kind of looking forward as you're game planning your trade. So that's just another way that you can use this tool to kind of take a quick and easy look to see if anybody had that great earnings report or terrible earnings report that maybe can shape up for a potential trade for you. So with that, ladies and gentlemen, as always, I certainly appreciate your time. Don't forget to subscribe and hit that notification bell. If you like the video, go ahead and give it a like. That's always appreciated. I will look forward to seeing you in the next one. Have a great rest of your day. Happy trading all, and I will see you soon.